guys, I'm Daniel LeBeau. Welcome back to the Fourth Revolution, where I discuss stocks for your portfolio of the future. Today I'll be focusing on volatility. Now, volatility is your friend. We've seen a lot of volatility in the retail-driven stocks like GameStop, AMC, Bed Bath & Beyond, and now marijuana stocks as Biden takes office and this new blue wave puts this federal legalization at the forefront of investors' minds. So now we're looking at volatility on the broader markets. And we've seen a tremendous rally since November with S&P 500 up 20%. And it looks like this week we're hitting a little bit of a pause as investors digest this tremendous Q4 earnings and try to figure out where we're trading at. In my perception, in my estimation, we're trading somewhere between priced for perfection and overstretched. And I think that we could be on a precipice of a correction, which would be a 10 to 20% pullback in the markets. And some of the catalyzers of this correction would be, a slower than expected economic recovery. We just came out with weekly unemployment claims that were not anything of an improvement from prior weeks. And, I think that's one of the reasons we're seeing a little bit of a pause this week. Investors are realizing that, we may be pricing in a little bit too much optimism as far as this recovery goes. And any hiccups with the vaccine or a new strain of the virus would be detrimental to this equity market. Another thing to consider is inflation. The Fed isn't really considering inflation as an issue. Jerome Powell said he's not even thinking about raising interest rates or doing any kind of hawkish moves as far as rolling any assets off the balance sheet. They continue to buy bonds and continue to keep interest rates low. And any kind of rapid move in the bond market is going to have a deflating effect on the equity market as a whole. So let's take a look at the charts and see where we are and where we are headed. So you can see that we've had a huge rally since the beginning of November, up 20%, hitting all-time highs on all major indexes. And we had a great earnings season. We had a couple profit pulls. And I think this was expected considering the run-up that we had into earnings. But earnings were just so good that the markets continued higher after these profit pulls, people buying the dip. And we're hitting all-time highs, like I said, on all major indexes this week. And, the S&P 500 is trading only, less than 5% below the consensus year-end estimate for the S&P 500 for 2021. And this is a level that I think we should not be trading at in February of 2021 with so much uncertainty out there for the rest of the year. I think that, like I said, we are on the precipice of a 10 to 20% correction. The VIX is coming down to its 20 resistance right here, $20 resistance, and we haven't really sizably fallen below 20 since the February drop-off of last year. And I think this is a level that we're going to see, if not a correction, at least a considerable pullback. And you can see, analysts are digesting this data right now, and that's why we're seeing this low volume across the board in the broader market. But we've had the sideshows with the marijuana stocks, like I said, and GameStop, as well as AMC and a number of other short squeezed companies, as well as Bitcoin. So, there's definitely bull markets and opportunity everywhere, but I think the broader market is just starting to feel some of the pressures of these side plays. And you can see this is the innovation-driven NASDAQ 100, primarily tech companies, and this has had some volatility since October, trading all over the board as the reopening trade begins. The reopening trade is the rotation out of some of these huge beneficiaries from the pandemic. The stay-at-home stocks like Amazon, Facebook, Google, and Apple, and so a lot of the stocks that are driving cloud computing as well. So, this is still, outpaced the S&P 500, not even by that much in the recent term, but from the pandemic lows, we're seeing a huge outpace. And I'm trading QQQ puts on the implication that this overstretched Nasdaq 100 is due for a larger correction than the S&P 500. Also, I have a pretty tech-heavy portfolio, so that's something to consider. Some March to June puts are something that you could consider to put on some protection and protect some of those gains that you've had over the coming years. Remember, guys, volatility is your friend. And I am hoarding cash at these current VIX levels as well as trading QQQ puts, like I said, the medium-term horizon to protect my gains. And I think with this 10 to 20% correction, we're going to have a massive buying opportunity for our favorite roaring 20 stocks and stocks for the fourth industrial revolution, trading at a relative discount. So I would be holding cash myself if I was you. And don't forget to check out my upcoming portfolio, the Headline Trainer. I'll be launching my first trades this upcoming Tuesday after President's Day. And I've had some huge winners in the past with NVIDIA and Twilio surging over 200% since I pitched them last year. We had huge upside gains from SEC Limited, a huge digital conglomerate out of Southeast Asia. And there's been a number of other big picks that I've had. So don't forget to check that out at zacks.com/promo to get on board. So thanks for watching, guys, and look forward to speaking to you guys next time.